Microsoft reported quarterly financial results, and the stock price fell after the company reported these numbers. And typically, if Microsoft reported this kind of a quarter, the stock price would have increased. But there was a couple of offsetting factors here specifically in the latest quarter that I wanted to detail and provide a little bit more understanding for those that were watching the earnings and then noticed that the stock price fell after the company reported earnings. I'll talk about why those factors, the offsetting factor, was more uh, bringing down the stock price than lifting it up afterwards. And then I'll talk about some of the long-term value of Microsoft stock and getting away from the short-term that we'll focus on in most of the video.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So here's the positive thing from the latest quarter. The most positive thing that I noticed in the latest quarter from Microsoft was that commercial bookings increased by 67% year over year. 67%. That's a huge increase for a segment that's already at hundreds of billions of dollars. And so that number would have caused Microsoft's stock price to rise a lot if they reported that during the quarter. But the issue was the biggest reason for this increase in commercial bookings was because of a commitment from OpenAI and ChatGPT that was announced a week or 2 or 3 weeks before this news came out. So the big expectation was already built in. And when the final number came out, it was like, okay, investors were already expecting that. So the positive impact of that wasn't as large. So overall, commercial remaining performance obligations increased to $298 billion, and that was up by 34%. Remember, commercial remaining performance obligations eventually turns into revenue. These are contracts, for instance, a 3-year contract, a 1-year contract, a 5-year contract, etc., that Microsoft has signed with enterprises. And Microsoft, as they serve that product or service, can then recognize it as revenue, right? When you sign a 3-year contract for $100 million as a business, you can't go and report that as revenue, all of it, all at once, $100 million when you make a sale. You have to prorate that over the course of the contract. So if it's a 300 million contract for 3 years, you can report 100 million for each year and roughly $8.5 million each month. That's how you would record a contract for $300 million for 3 years signed today. So this remaining performance obligation number increased by 34%, and it was up significantly from the previous quarter as well. And so that's great news. That's going to eventually turn into revenue for Microsoft. But again, the bulk of that came from that increase in bookings that came from OpenAI, that investors were already expecting a really high number from Microsoft. Okay. And then the downforce on the stock price, the reason the stock price fell, is the Microsoft Cloud segment. The rate of increase, the growth rate was 21% as they reported here, a 21% increase in revenue in the Microsoft Cloud segment. But that was slower than the previous 2 quarters. So for 2 consecutive quarters, it decreased. And then there was a couple of quarters where it was flat. And so if you look at a 5-quarter history, that rate of increase is slowing down. The second derivative is slowing down for Microsoft's cloud segment. So that was one factor that brought down the price. Another factor was that the gross profit margin in the segment fell, even though revenue still increased by 21%, the gross margin fell. And Microsoft talked about that briefly, saying that the Microsoft Cloud gross margin percentage was 70%, which is in line with expectations, but it decreased 2% year over year, driven by our increasing AI infrastructure spending. And so typically when Microsoft's cloud revenue rises by 21%, the gross margin would increase as they demonstrate leverage in the segment. But in this case, it declined because of those investments. And then to make matters worse, is Microsoft's AI infrastructure spending is planned to increase. If you remember a couple of weeks back, I did a video when Microsoft announced that it was going to be spending $80 billion on capital expenditure. That's up from $50 billion last year. So they're spending an extra 60% in capital expenditure, an extra $30 billion this year compared to last year. So if the margins are already falling with the $50 billion spend and the prior year spend, the 3-year previous average spend being lower than the forward 3-year spend is going to look like, investors are a little bit concerned about the margins in that segment. I say only a little bit concerned because, as you notice, the margins in these primarily software as a business or software as a service type models is lucrative, very lucrative, right? A 70% gross margin. You typically only see these kinds of margins in services type businesses or software type businesses where there isn't a physical product involved changing hands. So that's the force that brought Microsoft's stock price down. And this force was stronger than the force from the commercial remaining performance obligations number that was very positive indeed. All right, so zooming out a little bit and looking at Microsoft stock longer term, the analysts on Wall Street that are following Microsoft stock, they expect its free cash flow will rise from $74 billion in 2024 all the way up to $162 billion in 2029. So they expect a solid roughly $90 billion increase in free cash flow, or more than doubling of its free cash flow over the next 5 years, even after free cash flow includes capital expenditure. So even after those big spending increases, that's already starting to get baked in the cash flow expectations. Even after that, the analysts on Wall Street expect a nice increase in Microsoft's free cash flow. And just as a reminder, my intrinsic value per share for Microsoft stock is around $447 per share. Current market price as of this recording is $415 per share. So after that stock price decline, Microsoft stock's market price is now, I would say, on the lower end of where I would call fairly valued. I provide a margin of safety, so a market price that's within 10% of my intrinsic value calculation. I don't quite call it undervalued just yet. When it goes beyond that level is when I can start calling it undervalued. But nevertheless, an excellent business at a fair value. That's hard to find nowadays. Microsoft is precisely that.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.